Welcome back, everyone. Hope the sessions in the morning were useful and the break that you got has regenerated you. For the next 35 to 40 minutes, it is going to be a spellbinding session of some of the most revered chief executives running some of the finest asset management companies in our country. Their combined experience, is probably worth into billions, and I think it's important for us all to use this time to learn a thing or two from them. I have a lot to learn. I'm sure and hopeful that you will pick up a thing or two from them as well. The point of this panel is to try and understand and unravel in terms of how this industry will grow from here on. I think it's easy to rest on the past laurels in terms of where we've gotten. Great job, everybody, pat on the back, but as always, life has to forward-looking. We need to understand what is it that we need to do from here on to get to where we ought to get to. So I'll start with a round of questions, and probably to one of the youngest CEOs and the youngest fund house in this panel, definitely Ganesh. I'm going to start with you. What would you see to be the single biggest and the most important disruptor for the asset management industry to thrive? And I will only give 3-year horizon. I don't want a 10-year horizon. In 3 years, what do you believe will disrupt this industry in a positive manner to expand significantly?
My sense is we tend to overestimate what is likely to happen in the, let's say, shorter term, let's say 2 to 3 years, and very often underestimate what can happen in the longer term, right? But a lot of things will actually change in the industry, even in the shorter term, which will play out much, much more in the long term. And a lot of it will be driven by technology, right? What we are seeing in terms of what can happen in terms of technology, both in terms of getting access to information, in terms of access to products, access to things that we did not have access to earlier, plus the ability to be able to do things at scale without increasing your cost, right? So if you have to increase your scale 10x, 100x without increasing cost, there is actually only one way to do it, which is use technology, right? Now, arguably, we have been doing that as an industry for many years. What is likely to happen is that pace is going to accelerate, right? Now, whether that is on the distribution side, on the manufacturing side, on even, let's say, I would say in terms of the investment side, right? These are all significant impacts that we are going to see in the industry. I think it will we have to fundamentally look at our entire cost structures. We have to look at our processes, and we have to look at how, investors end up taking products from this industry at a very fundamental level. My sense is what is taking us, let's say, X amount of time and Y amount of cost, we have to now start thinking about how do we do it at, let's say, half or a third of that, right? And that, the only way we can achieve is through technology.
Thank you, Ganesh. That's very insightful. So technology, is the panacea of all problems as it appears. I think the takeaway I have from what you said is, look, reducing cost in an incremental manner is not going to cut ice. So brace yourselves up to reduce your cost by half, more than that, and basically drive productivity whilst at it. And that, in some sense, falls straight into the theme in terms of what we are trying to do here, with Iris, which is to basically enable the entire intermediaries with cutting-edge tools and technologies so that they do not spend any time in admin work, do not spend any time going to branches to get any work done, but use that time for customer acquisition, use that time for customer servicing from their standpoint. And from an asset management industry standpoint, obviously more the amount of time that we free up of your sales personnel and your distributors, and more the business it is for you. Thank you, Ganesh. That's really, really helpful. I'll quickly turn gears to go up here. Running one of the largest asset management companies, bank-based asset management companies. We have few of them, from KFintech, and it has always been, fascinating for me, go up in terms of how a bank-based asset management company looks at its world, and is it any different from, a standalone AMC. Now, in that context, I want to understand from you as to what are your expectations of mutual fund distributors to help you grow your business faster. Likewise, what are your expectations of service providers like KFintech for you to be able to service your clients, much, much better?
Thanks for asking this question. And I think Ganesh spoke about technology and how technology can scale. My view is that, yeah, we are part of the large institution called Axis, and yeah, we get an advantage because they acquire customers for us. Having said that, I may be a bit sounding negative today. This was what I took an O because somebody has to speak the reality of the industry today. The industry has what, 5 crore, 38 lakhs unique PANs. When I look at that number, we are just 3.5% of the industry. And if you look at that addition is happening in a larger space, my answer is no. If just think about my number says that fintech contributes 40% of the industry, not banks, not MFDs. 2019 onwards, if the fintech wouldn't have been there, what would have happened to the industry? That's one thing which we all think, and I sometimes get worried about it. So how do you acquire more customers? Because a lot of people have a wrong notion that if you are part of a large bank, a lot of customers come in. Interesting is that when I look at a unique number, I can't talk in a public forum, it is less than 10,000 customers unique we get from the bank like Axis. So the idea here is that how much you bundle this product to a customer is a bigger question here. And more fintechs coming in, they will acquire more customers. But the challenge here is that we also, when you look at where is this customers we need to acquire, it is the bottom of the pyramid actually. I am still, again I say that I'll put a caution that I'm not against industry. I'm just saying that the classification of B30 is still a biggest misnomer. When you look at a pyramid, bottom of the pyramid, and say from income or the cities, there's a large amount of customers today still looking at the traditional investments like chit fund, credit corporate societies. If you just look at a number from RBI number, how much credit corporate societies has deposits, it's almost 13 lakh crores. I think more and more, when you look at that, the borrowing side of that bottom of the pyramid has done fairly well because the microfinance industry has done fairly great job. I still remember in 2009, the first microfinance company came for listing. We all used to make fun saying that if you give a 3,000 rupees loan for 6 months, you hardly make 60 rupees as NPV. And how do you do that? So my answer is that they built a scale, they invested money. Maybe client-wise, when you look at the numbers may not be profitable, but I think bottom of the pyramid has an answer. I think how do we acquire this set of customers? And because these are not return-sensitive customers, but they are sensitive to the capital protection. How do you use micro SIPs to get this customer first? Our experience is that when you look at smaller ticket size, within 6 months, this customer scales up to a respectable number. So I think we as asset management company, and also as a distributors, I think we need to invest capital to acquire this customer. I think there is a fair amount of work happening on the fintechs there, but I think long way to go. My view is that, so this requires scale. This scale requires, there is some amount of cost. That's why I said, I agree with Ganesh that scale will build fast because there will be cost pressures. Technology is the only answer for us to scale from the bottom of the pyramid perspective. So my idea is that we need to acquire more customers. And the customers lies in the bottom of the pyramid because 70% of the India live in the pyramids below.
Thank you, Gop. Very, very insightful. So in terms of the next spurt of growth, you're saying, look, it doesn't matter whether you have a bank backing you or not. What truly matters is how you reach the bottom of the pyramid. Basically, how do you, secularly democratize to reaching every last grassroots. So I'm going to then, make the problem that you just articulated. Let's put Saurabh on spot and then see the solutions that we get to hear. Now he plays multiple different roles, and like Sandeep spoke a little while back in terms of his role in Amphi is spectacular to say the least. What initiatives, Saurabh, that you believe, that whether it is industry body in the form of Amphi or the AMCs or the distributors or even us, that we can essay to get to this bottom of the pyramid, as Gop has spoken about. I will also add 2 more, classes of individuals, if I may. One, young Indians. Every single year, roughly about 75 lakhs to a crore Indians are turning, minor to major, and another crore are basically getting a job, in a service industry, so to speak. Growing up, we used to download Flipkarts and Amazons to spend. I see youngsters downloading fintech apps to invest. There's been a mindset change, but I still believe a fraction of them have been tapped into. And I would also add, women. So to just articulate, with some amount of brevity, what do you believe that the entire ecosystem should do to get to women, to young professionals, and to the bottom of the pyramid to significantly expand the scale of the industry?
Thank you for having me here, Sreekanth, and congratulations to KFintech on this new initiative, as well as completing 40 years in the industry. Let me now, take on from where Gop left in a way, and let's put a few things into perspective. So, look, I'm not trying to be critical here. I'm just basically trying to say that we need to rethink, and maybe it's a personal feeling, but I think the last 2 years, we've got into a habit of patting ourselves on the back. Maybe a long way to go. We need to tone down, and there's a larger market waiting for us. So my first point is the industry is 75 lakh crore. How much of that is mark-to-market appreciation and how much is actual flows? We need to ask ourselves that. So, you may feel that, wow, 75 lakh crores, but you look at the actual flows, that's only 30% of the industry or the AUM. The remaining has been, we have had some phenomenal years in the capital markets, which has led to this mark-to-market appreciation. And therefore, AUMs have doubled virtually every 4.5 years. Good active fund management. I'm yet in the active fund management camp as compared to the passive. I think this industry has done extremely well over the last 10 years in active fund management, and I can show you statistics on the same. But it's a lot to do with mark-to-market growth. And why am I saying this is because, again, I often use the China comparison, but between 2019 to 2023, I think the Chinese market was seeing inflows. I'm talking about inflows of roughly $400, $500 billion a year. This is actual inflows. As compared to that, we have been seeing inflows of roughly, I would imagine, $15 billion on an average. So 15, 20 billion at best, as compared to $400 to $500 billion a year of inflows. I'm not talking of mark-to-market appreciation. So the limited point is, I think we need to scale up our businesses. If, as a distributor or as an AMC, I'm yet in that old fashion that, look, I can cater to 30 clients, 50 clients. If you don't start thinking, how do I turn my business on its head, where I can cater to 500 clients, you are going to have a huge problem. And you will have somebody else eating your business away, very, very rapidly. So scalability is the first point which all of us need to look at. And I'm not talking of incremental scalability. If you can't think of 10x, I think you'll have a problem. The second large point which I have is, this is an instant world. It's changed. I don't think people right now want to listen to 1-hour presentations. If you can't convey the message in the first 3-4 minutes, it's over. They may then listen to you for 1 hour as to why you said that in the first 3-4 minutes. But if you can't convince him in the first 3-4 minutes, he's going to move on. He's going to move to somebody else. And for that, we have to change our business models and the way we are working. You have all the tools in your hands. Are we using them? So somebody was basically saying that, look, a distributor was saying that I went to somebody, a client, he was recommended an X fund, and I asked him that, look, how did you convert it into, investing in the Invesco fund? Because, what led you to that decision? And he said that, look, I did a little bit of homework before I went there, and I told him that, look, all things being equal, the returns being equal, here you can liquidate your portfolio in 2 days, whereas in that particular fund which was being suggested, it was 15 days. Now, how many of us in this room are actually doing it or have the capability of doing it? I think there's a lot of information, how you are basically building your business around it, what is the way you are basically, what are the tools which you all are using to convert that business at that point of time instantly. I think that will be critical for this whole distributor community sitting in this room. Otherwise, if fintech starts getting that additional sort of or that incremental larger piece of business, we shouldn't crib about it then.
Absolutely. Thanks, Saurav, for that wonderful insights. It's the opportunity is there, and it's about how do we convert that rather quickly. We do believe too, when we do some data and analytics, the conversion rate from the time a person is intentful of investing in a mutual fund till he or she actually invests, if the time lag is more than 2 minutes, there is a 60% drop rate of the transaction ever fructifying. So I guess the reality is how do we ensure that particular 30 seconds to 1 minute after a distributor or a salesperson has convinced an individual that you actually consummate and fructify the transaction rather than walking away with an intent to close at some point in time, your success rate drops nearly 50 to 60% pretty much instantly. And I'm sure everyone knows that there are companies like Amazon and Flipkart where there are teams of 3,000 to 4,000 people whose job is only to do cart management. That means a lot of us will go to the cart, kind of identify something, put it in the cart, and we never buy. And there are teams whose job is only to convert by pushing, nudging the customers to actually go and buy them eventually, right? It is the same when it comes to mutual fund distributors as well. Thank you. So I'm going to continue to push down the path about how do we drive scale. Swaroop, I'm going to come to you on this topic. I long prophesized, and I could be entirely wrong, that instead of just competing AMCs with each other, what if you have the ability to compete with the entire banking as an industry, right? As an outsider into this industry, I thought, maybe, we should set sights high. And then, lo and behold, at some point in time, we are seeing that, fixed deposits are moving into mutual funds, and banks are not very happy about it. But I still believe there is more to it. And just humor me here. So I believe that a person puts money in a bank because there is some safety. And I'd like to believe that mutual funds are as safe and secure as a bank is. A human being also puts money because there is a return. Now, I believe that mutual funds generate more return than banks. There is a third component, which is liquidity and access, which is that I can take my money whenever I want. I can use it to purchase anything that I want. That is something that mutual funds do not yet provide. If through technology or through process changes, if we believe that we can make mutual funds as fungible as cash is, we can take banking industry head on, at which point in time, ideally, you would be looking at a mutual fund industry which is probably poised for 5 to 10 times. Now, I would seek your insights in terms of, and this is going to be very specific and pointed, on the assumption that my theory is correct, right? What does it take for us to make that a reality?
First of all, thank you so much for having us, and congratulations for this wonderful journey. Problem is, whatever I'm going to say, nobody is going to like. So I made that mutual fund disclaimer. The problem is not with the bank. The problem is not with the asset management companies. The problem is with the sales guys on the street, right? A banker on an average sells 9 products on a day. और उसको पड़ी नहीं है, उसको बोला जाता है बेचो तो वो बेचता है. A gold seller was telling us gold is great at 5,400 when I got married. You walk into that jewelry shop, is also telling you gold is great at 1 lakh. उसको पड़ी नहीं है कि कल क्या होएगा. If we restrict ourselves to that much, this industry can change. While we all know we don't know what is the market today, but ज्ञान देखो हमारे industry में. And look at how that ज्ञान has unfolded over the years in my own life. My mistake was not that identifying equity is a growth asset class. My mistake was standing in podiums like this and saying gold is the only growth asset class. And I am not finding a place to hide when gold is outperforming equity. Sorry, did I say equity? Sorry. I stood up on stages, like I said, equity is the only growth asset class. Now, I don't know where to hide. I fought the first half of my career, नहीं वो डीमैट है, क्यों डीमैट करते हो, अपना म्यूचुअल फंड अच्छा है. Today, like Sreekanth is telling you, open a demat account in 2 minutes. Let's go back to some of the data points which Prashant put up. Before COVID, we were 2.3 crore folios, demat were 3 crore folios. Where are we today? Struggling to be 6 crores. Where are they? How much is Dream 11? Exactly. So money has its way. Money is not coming our way because of our ज्ञान in the market. अब हमें पता है कि कल सब गलत बोलेंगे. That's the truth, whether you like to. This is my fight with my own team. We're trying to launch a fund. End of November, my team has told me, no, this fund, no, needs this. Arey, fund manager is telling this is a good fund. Becho. Fund manager will take responsibility, right? That's the only problem. The thing with the banker is, if you look at the financial assets of people, 10% is in equity, 32% is in gold, 30% is in bank FD. You check with anybody in this room, नहीं म्यूचुअल फंड में ना टैक्सेशन का प्रॉब्लम है, तभी डेट फंड अच्छा नहीं है. 23 lakh crores the investor is giving the bank in a year. Investor is not thinking that way. We are thinking. That's the truth, whether one wants to heal it. The difference between a 100 crore MFD and a 500 crore MFD is asset allocation. The person who is under 100 crores of assets sells only equity because equity gives him or her revenue. The person who is above 500 crores sells only 60% equity. Today, if you are not selling gold, you're not going to grow your assets. How will you sell a 12% as per Prashant when you were selling 25% yesterday? That's the truth, and that's a fight at a ground level. Otherwise, structurally, on history, on track record, there is nothing that the bank product stands up with our product. On all aspects, we've demonstrated 30 years of incredible track record for the industry. If it is not happening, then it's a collective responsibility of this room, is the truth. And if we don't cut out this bias and still feel gold is a hedge, then the problem lies at our end on scale of the business. What is the scale of the? I completely agree with Ganesh. Scale of this business is how to grow without adding people. Because this time around, the disruption is us. Technology is aiming at us. A lot of things we still carry on. And that's where Saurabh's point, make no mistake on that point. The advent of tech, even today, so many biases. नहीं नहीं वो robo advisory ना ऐसा है वैसा है, वही खाएगा हमें. If we don't live up to that promise which they give and do good to advice that we put on the table. So it's a behavioral issue at the end of the day is what I feel. And the reason I call myself a sad equity seller on my Twitter account is this one. Okay, too much biases. Sorry if I'm a little honest. My apologies.
Thanks, Varu. Well, I think it reminds me of Alan Greenspan. You know, he spoke about irrational exuberance. And sometimes I think, you know, with all the numbers of $1 trillion, 80 lakh crores AUM, it's very easy for us to get carried away in terms of how well we are doing together as an industry. But once you start peeling the onions, like, for example, Saurabh said that, look, you know, don't pat yourself back just, you know, as yet. Please understand that more than half of it is driven by markets, not because we got the money into the system. Money just, you know, money's value went up in some sense. So, which is true. So, all of these are good reflections because it helps us to have a reality check. It helps us to understand what else do we need to do to genuinely make an impact. I think, you know, it's true that the asset classes are competing with each other. I take Swarup's point absolutely in terms of, you know, asset allocation. You know, we can't just keep pushing, you know, equity. And this also brings us to the next point, which seems like the passives are here to, you know, have the lunch at the expense of actives. Now, one of the most prolific chief investment officers of our country, Vetri, you are transitioning into a brand new role. You've done this for a long time. Globally, when you look at US markets, close to $70 trillion, I think the passives used to be 4, now they have turned into $37, $38 trillion, so that's nearly 50% plus passives into active. global fund managers want to come to India, they are setting up shop, they are gung-ho about passives. Now, that is neither profit accretive to the asset managers, nor to the distributors, but definitely net-net accretive to investors. So in a world like that, how do you see the industry navigating, whilst, to Ganesh's point, keep cutting costs and deliver more, but you also have headwinds coming in the form of your revenue-generating capabilities will come down slowly if this were to be true?
Sure. That's interesting. And just to sort of rewind, I think everybody made some excellent points over there about the industry and the growth. I think one of the things that, and I say this conscious of the fact that I'm an investment person, I think one of the challenges is that the industry focuses on selling returns. It has not positioned itself as a means to an end, which is what people have traditionally associated the bank with. They didn't go to the bank for returns. They went to it because they thought this would help them get to an objective. And I think the most crucial role that people in this room play is not to talk about the product returns, but to talk about how the products stuck together, come together, using asset allocation as Swaroop said, to be able to enable that investor to achieve a goal. I think when you translate the conversation to that point, then you become a partner in that person's journey to achieving their financial goals. If you are only selling returns, and maybe as a manufacturer, we compete very intensely with each other. So we've got to hold our flag up and say, I did better here, or, each one of us would do that. But that is not the game that I think the distributors and advisors should be playing, because for them, that is just an input into getting to that goal. So I think only when you shift your thought process to saying, the reason I exist is to enable that investor to achieve a goal 25 years out, do you start to become integral to his life. If all you're selling is returns, you will always be disappointed by the fact that nobody said gaming sahi hai, but people went there. Nobody said F&O sahi hai, but more people went there. So we can pat ourselves on the back for saying MF sahi hai, getting that message out, but be very careful about being in the business of selling returns. You will not always have the ability to position yourself on the back of returns. So that's one, sort of broader comment I would make. As far as passives are concerned, why just passives? Globally we are seeing passives become very, very popular. We are equally at the other opposite end of the spectrum, suddenly seeing everything private become very attractive. People want to buy infrastructure assets, people want to go into private credit, because they believe taking that illiquidity cost over there gives them a superior return, right? Because the products that we run, which are daily NAV, if I have to give you a daily NAV to come in and to go out, to manage that liquidity, there is a dampener on the return. So I think from my point of view, this is an and business. You will have the actives, and I think fund managers will find that they will be able to create alpha at different points in the cycle. Passives will coexist along with that, and pools like private equity, private credit, infrastructure assets will coexist along with that. It's a question of figuring out, on balance, all of these put together, are you creating value for money for your investor, right? Because eventually that is the critical point. If you don't create value for your client, there is no reason for them to do business with you. So I'm strongly a believer in the fact that it's an and business. And on passives, you can run massive scale with very small teams. So, the scale pays for itself in very different ways. So as long as managers are focused on the and you are able to build the capability, I think the runway for growth is just tremendous.
Thank you, Vetri. Very, very insightful, interesting in terms of how you believe that it's not necessarily predatory. You believe that both the asset classes will coexist. What's important, however, for the audience in this hall is to embrace everything, embrace disruption. Running away is not a solution. Just because passives don't give us enough commission doesn't mean we can run away from it. Just because fintechs are going to give us competition doesn't mean we don't embrace technology. We have to embrace our worst fears if we really want to thrive. Without that, I guess, honestly, it's going to be exceptionally tough with. Now, let's realize that this is honestly old age tech. The artificial intelligence and the impact is yet to actually, have on this industry, right? we are precious little, accepting a few chatbots and what have you, but the real impact of AI, as you start to see, it will happen sometime late 26. I think there's going to be a ton more disruption coming our way, and then we may as well embrace it rather than hunker down and hide away from it. With that, let's just, we got 6-7 minutes, so probably smaller questions and maybe smaller answers. I'll just quickly come back to Saurabh, in terms of, mutual fund distribution count. I'll just spend a second on that. Now, I kind of briefly alluded to the fact that the numbers are roughly about 1.5 lakh to 2 lakhs. 150 crore people, pretty large landmass. We have 300 branches. You add up all the branches put together is maybe 1,000, and that will probably cater to 20 lakh people at best. And you've got 150 crore people. Even if you take away the non-investing population, 6-7 crore people. How do we increase the capacity of the mutual fund distributors? How do we make it 500,000? How do we make it 1 million? What help, if any, is needed from people like us to make that happen?
No, again, Sreekanth, my only submission here is each of these numbers I basically feel are extremely exaggerated. So while we basically can say we have 1.4 billion population, our target market is, at this point of time, according to me, is just 10 crores or even lesser. It's not the 1.4 billion at this point of time. People often compare the number of insurance agents. I've worked for a few years in the insurance industry, and I've seen it close. Unfortunately, I do get into the details of it. So people basically say 30 lakh insurance agents, 40 lakh insurance agents. 90% of them have become insurance agents because they were buying a policy and they had a foreign trip attached to it. They are not active insurance agents. And in the same fashion, we are basically right now saying 1.5 lakh mutual fund distributors. I think the active mutual fund distributor community is yet extremely small, maybe 15, 20,000 is the number which have meaningful AUM and meaningful business. And that is the main business for them. It's not a byproduct or where, I've just taken the ARN code because, by the way, if something flows through it, they're saying I wouldn't count that. So really, again, very long way to go in terms of increasing even the efficiency of the existing number of distributors. If that goes up by 3x, 4x, courtesy some of the tools which you're getting, AI, scalability, whatever you may say, but if I can convert, this number of active mutual fund distributors, say from 15,000 to 50,000, I think we'll be in a much better space as an industry. And I think our focus should be on really looking through some of these numbers at a headline level and what is the actual number which is making sense or which is actually doing the business.
Thank you. Thanks a lot, Saurabh. So it's not just about scale. I think even the numbers which seem less, from the surface of it, Saurabh's view is it's much, much lesser than that. Clearly, there is a need to expand that base, and hopefully Ignite is going to be one of the catalysts to make that happen. Quickly shifting gears in terms of regulation. Sandhu had spoken about how regulation has had a very positive role in actually augmenting the AUM of the industry, bringing the stability, bringing the resilience. We saw, in a very, very short and a concentrated space of 2 to 3 years, a massive amount of regulation. Now it's tapered down a bit, which is probably great news for a lot of us because it needs time for it to percolate and for people to start, getting used to it. Swarup, I'll come to you in terms of what additional regulation, not what is already done, that you believe that is needed, one, to safeguard the interests of the retail investors. Two, whilst not taking a very hawkish view, the regulation that is needed to further develop the industry. So on those two angles, if you could.
Yeah, I'll keep it short in the sense that, see, we are very fortunate, or मैं मानता हूँ कि if we would have done something great in our previous birth to be doing this job today. Okay. we run a fiduciary role. Our entire business is based on somebody else's hard-earned money. Okay, the more the money grows, the more regulation will come, and it needs to come. Don't fight regulation, embrace regulation, anticipate more guardrails is the reality of our business. The more transparency you maintain at your business level, the freer you become to address regulation. But I firmly believe that as the money goes from say 78 lakhs to 1.5 crore lakhs or whatever that figure is, the number of regulatory aspects of this country will change. Please remember, now in the digital world, the risks that are associated in the flow of money are far higher than what it used to be in our old physical world. So I'm a big fan of following. See, there are two types of people, a law follower and a lawmaker. We are all not lawmakers sitting in this room. So be a good law follower and don't question the law. If you have that capacity, do it. It will be a waste of time.
Excellent answer as always, sir. Thank you. Quickly shift gears to probably an opportunity that Vetri you have now, which is in some sense, if you have to recreate, now with your long experience of being in UTI and you got the opportunity, every new opportunity to be at the helm of the affairs is pretty much an opportunity to start up something new. Now, what would you do in some sense, if you were to start a brand new AMC today, but with everything else that you already have going for you, massive distribution network, financial strength, and a brand?
Sure. So Sreekanth, obviously, you have to live in the here and now, and living in the here and now of India means that you have to deal with people living in the past, those who want service in the present, and those who want something completely different in the future. So unfortunately, we don't get to choose which world we want to live in. The customers live across these, and they're not even watertight compartments. So I think point number one is you've got to make the best of this situation. But just if I was blue sky thinking in terms of if I was 30 years younger when I did try to set up a broking company, which is now part of Swaroop's entity, 30 years ago, it was too early to think digital. But I think today, if you really had to do it all over again, there's only one word, which is digital. I mean, can you build a digital-only company which is digital in every sense of the word? Because I think that's the kind of world that we are heading towards. I call my daughter and sometimes tell her, book a table for dinner, and then we'll discuss 2-3 options, and then I'll finally ask her, which one did you pick? He said, no, I booked at this restaurant because there I could just click on the app and book the table. I don't want to call them up, right? So that's increasingly the kind of world that you're heading into. And therefore, if you're not digital, or if you had the luxury to say, I'm starting to this today, and this is what will be the need of the moment 20 years out, then I would say build only digital.
Excellent. It almost makes me feel like I'm moderating a tech company CEO panel than asset management industry CEO panel. But wonderful. I'll quickly turn to you, Ganesh, in terms of you represent an organization whose name is just absolutely as ubiquitous as it can get. I mean, growing up, we heard Bajaj in something or the other. There is no way any Indian wouldn't have heard of you. You have played very many roles in the group for a long period of time. How do you see, now at the helm of the affairs in this particular industry, the retail customer behavior, I'm not calling investors, retail customer behavior, in this industry, where you are now part of? Compare and contrast with other businesses, how, Bajaj managed to, create a massive corpus of, tens of crores of investors. What lessons have you drawn from there that you can implement here so that you can see the similar amount of growth?
The first thing I would say is, let's say, if I compare to lending or even to insurance, right? This is a much more, I would say, high engagement product, right? See, lending is actually a route for you to acquire an asset, right? Nobody really wants a loan. They want the product. A loan is a vehicle to get you there, right? Similarly, insurance is a very, very important product. But whenever you're consuming that product, you're actually in a time of stress, right? You're either in a hospital or you had an accident, any kind of distress. It saves you at that time. But the predominant emotion at that time is, I paid my premium, I got my claim, everything's fine, right? Now, Investments, on the other hand, is a very, very, I would say, high engagement and a positive reinforcement kind of a product as well, right? People want to check their portfolios. They want to see how their funds have done. When the market goes up, goes down, there's always that interest. So it creates a much greater level of engagement and connection with the customer. Second is, as we see the retail customer in India, right? There's a very significant shift that is happening. We are seeing people moving from, or India is moving from a GDP per capita of about $2,800 today to about $5,000 GDP per capita in the next 5 years, right? This is a very massive shift because wherever this has happened, any country this has happened, right? GDP is obviously, let's say, doubled, but mutual fund AUM has grown at about 3.5 to 4 times, right? So what happens is people start investing a lot more at this kind of an inflection point. All financial services see a significant growth, but definitely investment sees a disproportionate growth. And that happens because people start having greater aspirations for themselves. They want to move from a two-wheeler to a four-wheeler. They want to have a slightly bigger home. They also have a little bit of money left at the end of the month, which they want to invest for their own futures, right? So what we see is a very high engagement product, huge opportunity for growth, and this is the right time. So, when Swaroop says that we are, in a very fortunate position to be where we are, right? It's actually very true. A lot of things that our parents, our forefathers, even predecessors in this industry have done, have actually helped us to stand on the shoulder of these giants. So I think the future is very, very bright when it comes to serving retail customers with financial services in India.
Thank you, Ganesh. Okay, that leaves us with the last question that I'm going to bother Gop with. Gop, so there is a spate of international fund managers coming to India, large ones. Here we are at an inflection point where the India-grown, homegrown asset management companies, definitely have challenged many of the global giants back in the day, Goldman Sachs, Deutsche, many of them. Do you see the new coming of the foreign fund managers now a bigger challenge than before? And if yes, what is it that Axis is doing to fight that battle?
Yeah, thank you. You're asking me some indirect questions, so I'll be very upfront and upright. The idea is that we welcome competition. I think Bajaj was one of the competition, well talked about, right? I think we welcome. What happens when the competition comes in is that your ability to scale is much higher. My view is that if a competitor coming with a global experience of digital, high scale, with a large technology, speaking about AI, human layers, it's good that you will acquire a lot of customers. Let me give a truth here, is that one unique PAN, an advisor or a customer will buy only 6 SIPs. For a lump sum, you'll buy only 3. I don't think every customer will buy all 6 schemes. And in fact, when I looked at the number, India has 1,800 schemes, and 1,200 schemes are marketable. Look at tough job, what we do. We come and convince you, right? You have a choice of only giving 6 schemes for a unique PAN. So I'm quite happy when these companies come to India because they create market, they create new set of KYCs, and it's good for us. And we have seen when the fintech grew very fast, they also created a new set of investors. And these investors, in some point of time, has migrated to our MFDs. So client onboarding problems are solved. KYC issues are solved. So in my view, I think all my colleagues, I think we all say the same thing, that we welcome competition. We love competition, but the competition is a great job of getting customers. We're okay to give 1 SIP to him. We got a 5 SIPs more to do.
Wonderful to hear that. Well, so basically, challenge accepted is the position that, India AMCs have taken, and rightfully so. We should be taking the game head on. We should start creating Indian multinationals across the world. And in some sense, as Sandeep too articulated, as is the vision of the Prime Minister, I think it's time that, or rather the global people are, the rest of the world is asking, when is Indian money going to come here for investment? So maybe it's just not very far from here. Well, with that, we conclude the first panel. My sincere thanks to all the panelists. Absolutely candid answers. I think I should make the questions a lot more tougher for the next round, and probably put you all in spot and get you out of the comfort zone. So this was just the warm-up. So this is the very first time we've done such a thing, and then look forward to doing many more of these. So thank you so very much for patiently hearing us out.
Well, absolutely powerful words from our power panel. Can I please request you to remain on stage for a few more moments? And now to felicitate our thought leaders, I would like to invite on stage Miss Hanisha, please. Can we have a loud cheer as she walks up on the stage? And let's begin this felicitation with Mr. Sreekanth Nadella. Well, we have Mr. Swaroop Anand Mohanty. Let's felicitate Mr. B. Gop Kumar. Mr. Sreekanth Nadella. Next we have Mr. Vetri Subramaniam. Ladies and gentlemen, once again, can we have a huge round of applause for all our panelists, Mr. Sreekanth Nadella, Mr. B. Gop Kumar, Mr. Ganesh Mohan, Mr. Saurabh Nanavati, Mr. Swaroop Anand Mohanty, and Mr. Vetri Subramaniam. And before you leave the stage, can I please request you all to join us for a group picture. Thank you so much.